boy, oh boy, oh boy, it is looking ugly out there. I mean, looking at the markets these days, it's all red, it's all going down. I think the only thing going up these days is my blood pressure. But seriously, I mean, it's all tanking. Just look at Bitcoin, for example. The last month, it lost 25%. The last 5 days, 15%. And just today, over 7%. The same story can be seen in stocks. I mean, the S&P 500, the 500 biggest US companies, dropped the last month alone by 5%. In the last 5 days, 5.7%. Is that the end of the bull run we had in the last few months? And now people saying the winter is coming. Chris, the CEO of Crypto.com, says it may snow for a few days, but there will be no winter. Well, hopefully he's right. But the reality is it does look pretty gloomy out there. And I personally did say at the end of last year that 2020 is probably gonna move sideways, but I guess I didn't expect it to go down that much. So I think there are two big forces at play influencing this pricing at the moment. Number one is of course the inflation rate. As you can see in the US, the inflation rate hit 7%, which makes it the highest since 1982, and it's huge. In parts of Europe, it almost went over 10%, which is absolutely massive. I mean, normal inflation levels, you talk about 1.5% to 2%. So having 7% is extremely high, because basically that means if your money earns less than 7%, you are technically losing purchasing power. So over time, your money becomes worth less. And at the same time, obviously, the workers are demanding higher wages. So that puts pressure on the wages. So the wages will go up over time because somehow people have to live and pay for these higher prices. So what happens naturally, companies increase their wages, but in return, they're also increasing the price for the services or products. So as that goes up, once again, people are having less purchasing power because things are getting more expensive. So they want higher rates. So it really becomes an escalating race of inflation versus wage inflation, and there is no real end in sight. So who knows how much higher that will go. But that of course has a very much detrimental impact on retail investors, because if you remember a few months ago when everybody was at home but still getting money from the government or stimulus checks, they were sitting around, nothing to do, with extra money in their bank. So they all went to the stock market, into the cryptocurrency market, and started investing because everything seems to be going up. So might as well put your money there because naturally it will increase. But now as things are getting expensive, people sit at home and say, wow, I have no money. They're traveling less, they're spending more on their groceries. So naturally they're able to save less than they used to before. And if you have less savings, you naturally invest less into the stock or crypto market. And that's why we see an outflow of money, people taking back their money. And that leads to a downward trend in the market. And that's even more accelerated by liquidations, especially in the crypto market, where people margin trade. So they took a long position. Let's say they expected Bitcoin to increase even more in value. So they margin traded. So they took some of their own money and then had money from the bank or other institutions on top of it that they used in order to buy even more Bitcoin, which is great if it goes up because you put €1, they give you €3, so you have a much higher return. However, if the market moves against you and the price for the coin drops, instead of losing $1, you actually lose $4. So there's a leverage effect, and once it hits a certain price floor, you are being liquidated because you don't have enough money to pay back to the bank or institution that gave you the money in the first place. And once people get liquidated, naturally the prices will go down further. So there's a downward spiral effect on that. And as you can see here, in the last 12 hours alone, $680 million were liquidated because people couldn't cover their positions anymore. So once again, when people see that, they panic and they start selling, which once again puts downward pressure on the price. So that's the first driving factor we see at the moment. And the second driver behind this is the expected increase in the interest rates. Now the Fed over in the US is potentially talking about further increasing the interest rate. I mean, we're talking about a few decimal points, but nonetheless, this has big consequences. On the one hand side, it affects growth stocks. Those stocks that have high growth potential because people invest in them in their future earnings and profit potential. But often they don't have profit at the moment. So they actually take up a lot of debt to increase their future earning potential. But as the interest goes up, the cost of debt actually increases as well, making them even less profitable. So that's why you can see the growth stocks at the moment really taking a dip. On the other hand, for retail investors, it becomes less attractive investing in the stock market and more attractive keeping your money in the bank, bonds or treasuries, because they will go up in value and it's a much more safer investment vehicle rather than putting your money into the stocks or crypto market. So even though we're talking just a few percentages, that still has a huge impact on people's perception of how the market might be doing in the future. So it's going to be interesting how these market dynamics play out. But honestly, I wouldn't be surprised if you're going to see even more drop in the coming days and weeks ahead. What's also interesting is that the correlation between Bitcoin and crypto and the stock market is becoming more and more aligned. Because in the past, people would move out of stocks and then into crypto, and out of crypto and into stocks. So it was kind of offsetting each other. But these days, it's becoming more and more aligned, which is really interesting to see. And for me, that gives me also confidence that Bitcoin is really becoming a more investable asset class in the future. So the question is, what can you do about it? Well, technically, there's only 3 things you can really do. Number 1 is sell everything and run while you can. Just kidding. That's probably the worst strategy because the market already tanked so much. If you sell now, you actually realize your losses. But we have seen in the past that this is is a natural cycle. As you can see, every year there's ups and downs, ups and downs. So we may currently have a little downturn, but in the future, again, it's naturally gonna go up over time. So I think the worst you can do is probably selling right now, unless you really need the money, which I always recommend. Don't invest money that you would need. Have a safety deposit for a rainy day, so you don't have to pull out your investments when things are bad. So really, if you can avoid sell, don't sell. Your second option is to HODL. Hold on for dear life. Just hold on to it, right? Sit it out. Probably check the stocks and news a little bit less and just accept that things will go down or move sideways for a little bit longer. But again, if you don't need the money right now, just hold on to it. Just ignore all this buzz about, because it's great news. People talk about the crash is coming, the crash is here. It's great news for TVs and podcasts and YouTube shows. People are drawn to attention and negativity, but just try to ignore it, because naturally things will increase over time again. And the last option you have is actually to buy more. As Warren Buffett said, be fearful when people are greedy, which was last year. And now he would say, be greedy when people are fearful. Because basically everything you bought before, you can buy again now, but at a much discounted price, which is amazing. I mean, take Bitcoin, for example. If you believe in Bitcoin and the future of cryptocurrency, and you loved it, you followed the hype when it was just a few months ago, back in November at $64,000, and you liked it and bought it then. So why then wouldn't you want to buy today at $36,000, almost half it was worth a few months ago? Yes, I know it is scary because it might drop even more. But again, if you believe in the long-term viability of Bitcoin or other cryptos or stocks, then this is the best buying opportunity. It's so funny, people wait until Black Friday till they can buy their dresses or clothes or electronics. But when we have a Black Friday in the stock market, people panic and don't buy. They rather wait until the sentiment turns, everybody's positive again, and the stock's been up. These are the real money-making opportunities. So if you have the necessary cash and funds to buy, it's a fantastic opportunity in time to get amazing discounts on your favorite crypto or stocks. Gonna go shopping for some stocks. See ya! Now you may ask, Kai, so what exactly should I invest in? Honestly, I don't think this downturn has changed anything fundamentally. So for me personally, I just keep on buying what I bought before, because I think it's just a natural cycle of the market. But overall, the stocks I invested before, I have not fundamentally changed my outlook on those for the future. But if you're a bit more conservative and want to play it a bit safe, some great inflation hedged investments are some of the following. The first one is being gold, which traditionally has always worked as an inflation hedge over the years. Personally, I don't like gold because I don't like to store it or keep it somewhere, and I don't think it's very liquid. But if you are a bit more conservative, I think it can have a place in your portfolio. Secondly, commodities. These things are definitely a great inflation hedge, because as inflation increases, those commodities, everyday buying items, are also increasing in price. So you're kind of beating inflation by having those. You could buy commodity-based ETFs that are built around various commodities. Then of course there's real estate. Real estate traditionally in times of inflation increases as well at the same time, because as inflation and prices get more expensive, so does the rent, so does the price for the asset. And then of course there is my beloved S&P 500. So that's basically an index following the 500 largest US companies. And you could buy into this through an ETF. That could be from BlackRock or Vanguard. There's so many providers out there. Personally, I buy from Vanguard, and as I'm based in Europe, I'm buying the VUSA through Interactive Brokers, which is based on the VOO that follows the S&P 500. Because this has traditionally over the last 50 years returned a 10% return. So even if inflation goes all the way up to 7, 8, 9%, I'm still generating a higher income and growing my money over time. And yes, we have seen that the S&P also dropped in recent months, because again, it follows the market, and in those 500 are also some growth stock companies, etc. So everyone is taking a hit at the moment. But again, over time and as a long-term investor, I think that might be your safest bet, where you just dollar cost average in. Every month you put a certain amount, as much as you can, and over time start building up your portfolio. And by doing this, you can set it and forget it, and don't have to follow all the news to get your blood pressure up or worry too much so you can't even sleep at night. And that's why I personally also will continue buying into the S&P 500. If you want to learn how to buy ETFs, check out the video over here. And if you want to do it on the go from your phone, you can check out the video over here. Stay strong, guys. We're gonna get through this crisis together. Most important that you stay healthy, blessed, and awesome. If you haven't already, please subscribe to the channel and give the video a like, and I will see you in the next video. Ciao, ciao.